Hello and welcome back to my channel. My name is Oscar, and as the title says, I will be going over a brief introduction as to what growth investing is. I will also give you a quick update on how my portfolio is doing, and then lastly, I will point out a few of the big companies that are reporting earnings this coming week of April 27th. It'll be interesting to watch those companies because it'll give us a good indication of how they were affected due to our current health crisis that we're dealing with. And it will also give us a good insight as to how the markets are performing overall in general. And who knows, you might even be able to pick up a few growth investing stocks for a pretty good value after earnings come out. As always, if you like this type of content, feel free to give it a thumbs up. It really helps support the channel and it lets me know that this is the type of content that I should be creating more often. And if you want to stay up to date with how my portfolio is doing and any other stock market news in general, go ahead and subscribe down below and YouTube will notify you whenever I post a new video. Okay, so here we have my portfolio total balance. It's at 7,044 with a 6% gain, which comes out to $344.67. I have a little bit of money ready to put to work if we get a much expected dip in the market. But if we look at this past week's performance, I am down almost 2%, which comes out down to minus $136.57, which is fine, but I feel like the markets just rebound way too fast with a lot of uncertainty in the near future. So I'm doing my best right now to be patient and not buy because I feel like things are going to get worse before they get better. Overall, my stocks were down this past week. Nothing too exciting. Apart from that, I'm just going to keep waiting to see when the deals come out so I can buy. So with that, that's really all I have to say in regards to my portfolio update. The only same as last week. Most companies I'm down on, and the ones that are keeping me alive are pretty much Tesla, Apple, and Costco that are still in the positive. And NextEra Energy is doing pretty good as well in terms of percent gains. Okay, so now let's talk about growth investing and how it can be used and applied to grow your money even during an economic downturn like the one we're dealing with right now. So growth investing refers to a strategy where you as an investor are looking for stocks with potential fast, high growth in the future. So investors pay more attention to the expectation of the company growing in the future, and when the expectation rises, it creates a higher demand for the stock and it pushes the price higher, potentially creating profits. As with any type of investing, there are risks and benefits associated with adopting a growth investing strategy. One of the main benefits is the potential for high return through capital appreciation. This can happen in a short amount of time based on the growth of the company. The risks include high volatility, which means that the stock price fluctuates a lot. So if this is money that you need in the short term, it's probably not the best idea to stick your money in a potential growth stock. A good example of a high growth stock is my favorite, Tesla. That company has some crazy volatility, but overall it goes up because it's growing like crazy. And people are starting to take notice of that. The other risk that must be considered is not getting the growth that was expected out of that company. If the company doesn't pan out and grow like it was expected to, then the price is probably not going to go up as it should. So how do you determine whether a company you're looking into is a good potential growth stock? We'll be looking at Tesla, as that is a company that I'm personally invested in, to give you an example and an idea of what a growth stock looks like. The first thing I like to look at when looking at growth stocks is their historical growth. You want to be able to see an increase in the company's important metrics like revenue, earnings per share, and cash flow. Revenue is the top line, or the money coming in prior to taking any of the expenses into consideration. You always want to see an increase in revenue growth quarter over quarter or year over year because it gives you a good indication of whether there is a huge demand or no demand at all for the product and services that the company is providing. If we look at Tesla, you can see that constant increase year over year for the past 4 years of revenue growth, so that's a good sign. There's also earnings per share or EPS growth that you need to consider, and that just basically means the profit that the company takes after taking into account all the expenses that were not taken into consideration for revenue. A company's ultimate goal is to be able to create and increase their profits, so if a company is not increasing their profits, then there's no point in looking at this company as a growth investing company. One thing to consider is that you want to be able to see that a company is growing their EPS at the same or just about the same rate as their revenue growth. Because if the revenue is growing but their EPS is not growing, that means that there's some sort of mismanagement going on in the company, because as you bring in more money, you should be able to be profiting more money. When looking at Tesla's EPS, it is not perfect, but the general trend is that the EPS is increasing. In the past year, they went from a negative earnings per share or losing money to gradually getting into the positives by the end of the year. That's definitely a good sign. And in my opinion, I think if you have increasing revenue and an increasing EPS, then you're doing good and the stock price should be going up along with it. And then lastly is cash flow. The cash generated by a company over time after accounting for the cost of maintaining and acquiring assets. This is different from EPS because EPS also takes into account sales of product to which they have not received payment for. That's why it's important to look at these two metrics side by side to be able to get a full picture of a company's performance. Tesla's cash flow has been negative for the most part in the past 4 years, but each of the years they were losing less and less money until last year in 2019. That's when they went profitable for the first time. And lastly, there's the stock price, and that's just exactly how it sounds. You want to be able to see in the stock price chart that the price keeps going up over time, because in the end, that's what a growth company is all about. You want to be able to see that the price of the stock appreciates over time, and that is how you make your profit. So with that, now you know a little more about what growth investing is and what are some of the metrics that I like to look for or analyze whenever I'm looking for a growth investing company, and how I use Tesla as a good example of that. Lastly, I just want to go over a few of the companies that are reporting earnings this week. Just want to go through them real quick and give you just a heads up on what those companies are. So the first one is on Tuesday, 3M is reporting, and that's a pretty interesting company because they have been supplying all the masks and all the safety equipment needed to kind of fight against the health crisis situation that we're dealing with. Also on Tuesday, Starbucks is going to be reporting earnings. I think it'll be interesting to look at Starbucks just because although they have been closing their stores down, their drive-thrus have still been open. So that's kind of interesting to see if drive-through traffic was enough to offset the not being able to have the stores open inside. Then also on Tuesday, Pfizer is going to report earnings, and I own some of Pfizer, which is why I'm watching it. I guess they were talking about having some sort of vaccine. We'll see what their update is on that. A bunch of pharmaceutical companies were working on a vaccine, so just waiting to see what Pfizer has to say, and hopefully they have some good news. And then also on Tuesday, so Tuesday's a big day, Alphabet, aka Google, is going to be reporting numbers. We'll see how that goes. It's a tech stock. I have other tech stocks, so I don't really, I keep an eye on its price, but don't really follow it too close. Then on Wednesday, Facebook and Microsoft will both report, and I think Microsoft is probably going to be fine. It's a company that I hope goes down because I would really like to get into it, as I think that's a good growth stock for the future with all the different services that they provide, Microsoft Office, Azure, their cloud system, all that. Then on Thursday, Amazon and Apple are reporting earnings. Amazon, well, they've just been doing great. They've been benefiting from our current health crisis, and their stock price has just been shooting up like crazy. And then Apple, we'll see how they report. I have some Apple. They said they're coming out with a new $400 of the SE generation type iPhones. So we'll see how that goes. I think they would have to sell a lot more to be able to make up, because they're so much cheaper to be able to bring in the same amount of profit. And then on Friday, Clorox is reporting, which is also, I think it's going to do pretty good just because they're disinfectants. Those are the types of products that they sell, so which is perfect for our current situation. So with that, thank you guys so much for watching. Really appreciate you if you stayed this long. And if you like this type of content, as always, please give it a thumbs up and subscribe down below. I'll see you next time.